And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, October 3rd, 2021. I'm starting on my monthly chart tonight because I want to go over a few of the Elliott aspects of what we're looking at and how I arrived at the size of the top that I believe we've already put in and now are in the very initial stages of a multi-year corrective phase. So starting here on the monthly, what I believe we have just finished would be up to a cycle wave 5. So it's on a cycle degree, and that cycle wave 5 began off of the October 2002 lows. And those lows, if I go one more out, was a result of that .com bust. And that did start in 1999, or basically just about, March of 2000. And the NASDAQ lost about 87% of its value in about a year and a half, maybe a little bit more, about almost 3 years. So it lost 87% of its value in 3 years. I am looking for a cycle degree corrective move here. Now, I don't feel right off the bat that the NASDAQ intends to lose 87% of its value because it was a very different market conditions. And also we would be in a much different corrective phase if we go one more level up on a super cycle level. What does it complete? And in my mind, I believe it completes if I compare data from the S&P and the NASDAQ, since they're now more joined at the hip, haven't always been. But if I'm looking at that, then I think the continuation would take this up to a super cycle wave 3 completion. And then what we're looking at is a super cycle degree wave 4. So jury is still out if I can go up that high. And then if that is the case, then maybe at best, because the NASDAQ is not as old, it doesn't have as much data as, say, the SPX, which we can go back to 1928, or with the Dow, where I can go back to, I believe, 1903, where we have the cash data. And the NASDAQ, it wasn't that old. The index isn't as old as the others. So that's why I think maybe we're just completing super cycle wave 1, and that we might just be in a super cycle wave 2 correction, but that's just talk to go up that high. So we still have to deal with what we're in. And so if I'm feeling that we are going to do a cycle wave ABC, a cycle degree ABC, initially cycle level, I'd be looking for it to come back into the price territory of the fourth wave of 1 lesser degree. And right now, that is the primary fourth wave. And that primary fourth wave comes in, that was from March of 2020. That's the initial. But if I had to say, what are we correcting? We could be in a more extended corrective phase. And that would then have to correct the last 19 years. And it's because this is October of 2002. Actually, October. And this all the way up here is October of 2021. So the rally's 19 years old. And the correction, I believe, first stage comes down to here. We have much larger potential beyond that point, but I need to see what the structure is going to look like before. I don't think I have enough data to take it up to a much, much higher level. I think that it could be, for example, this is super cycle wave 1, we get the super cycle wave 2. And it could really put a crush on the NASDAQ, but who knows? At this stage of the game, who knows? So I can, with more confidence, say that we are correcting from the lows of 2002 to the highs of 2021. And you can draw a simple measure from that high, from that low to that high, to put more parameters around what this might look at. look like. But right now, I believe what we're completing or correcting is, again, that cycle degree, but I have to drop it down to a primary degree for that corrective phase where it's a beginning. So now I start to just work my way down, and I'll go to the weekly, which brings us to that March of 2020 lows. So in essence, to kick off, what we're sincerely correcting is the last year and 6 months. That's what's beginning. That's the beginning. And maybe this is just going to be a primary A wave down. And now I'm going to take it down again to the daily. So if it's going to be a primary A wave down to that level, then what's going to be inside of it? Well, I think what could be inside of it is either an intermediate degree 1, 2, 3, 4, 5, a 5-wave structure down, which I do believe is what is occurring. So that then brings me down another level. So on the daily, we can see the way I have it marked. The way that I have it marked, let me go down to the 4-hour. The way that it's marked right now puts all the highs up here at, come on, 15,708 or 709. And now we are putting in an intermediate degree decline to put in that first primary wave A. So that primary wave A can take 2 different courses. It could be a zigzag down. That would be a 5-wave structure down. It's going to just zigzag its way down. Or if it's an ABC, then it would be more likely to be a flat. So it could be ABC, and then a B wave comes in as flat. But it's not going to drop as steeply if we pull this out as a 3-wave versus a 3-wave. So if it's going to be a 5 versus a 3, the 5 is going to take it much, much lower. So that's what I'm actually looking for. And why? Because when I go back out to that weekly picture, we're still way up here, 14,000. I think ultimately within the next couple of years, we end up back down at 66,000. Price territory of the 4th wave of 1 lesser degree. Boom, right there. So at a bare butt minimum, right here. So still, from 14,829, which is where we're trading right now, I'm thinking that at a minimum, 12,915. That's where I think this market needs to go. So to what degree we are corrected? This is the primary degree. This is the intermediate degree. We can continue to take it up, and you can see how it all fits in. Remember, they're stepping stairs, they're building blocks. Same thing's going to happen on the way down. Absolutely same thing's going to happen on the way down. They're building blocks on both directions, whether it's correcting or whether it's not, or whether it's impulsing or whether it's correcting, still the same building blocks. Now, as I come down into this thing, I still don't like that, but it was the absolute bare bones beginning of a much larger decline. There was a lot of like, no, it's not, yes, it is, no, it's not. It was buy it up, reject it, buy it up, reject it, buy it up, reject it. And we're still having those. And now I believe we're having another. So if I'm sticking with intermediate wave 1, intermediate wave 2, we're in an intermediate 3rd wave. Well, Friday's action just moved down, put in a new low of 14,537, and then just decided to rock it up. Now, I believed at the time that it was more involved with it being expiration and the day before being the last day of the quarter and the last day of the month of September, that there was a lot of position squaring, a lot of position changing, and that carried over into Friday because we were starting to push through too many strikes. And that forces so much adjustment. When you have options expiring and they expire into the underlying that you happen to be trading, a lot of activity is going to happen. And remember what I said, that the volatility, if it increases on the downside, it sure as butt's going to increase on the upside as well. The volatility, how quickly prices will move and how far it will go, increase. Now, how do you fit that into an Elliott wave count? I have taken this minor wave 1, because remember, intermediate wave 3, I'm looking for 5 waves of minor degree down. 2 will be counter trend, 4 will be counter trend, but the others will follow the trend, which I believe now is down. So this, I believe, is the start of a wave 2, a minor second wave bounce. Now, most common, first one is 382. That's 14,866, right in there. Well, right now we're 20 by 40 points away. For the NASDAQ, that's like a walk in the park. But more common, so we've gotten above the 20 now. This is the 4-hour 20. We've gotten above the 4-hour 20. It's pushing, still picking up a little steam. It's got some strength. Next up is going to be that 14,866, but we have the 50 sitting right below the 50% retracement at 14,968. The 50 is sitting at 964. The resistance is at 968, so that's the zone. But that is, now if we break and can stay above this 20, then it's providing us with some strength for an upside move. What lies above that? Well, on a moving average basis, we have the 50, excuse me, the 200, and that's at 15,170, I'm going to call it, 65 to 70. But what's in its way? We do have a Fibonacci resistance at 15,145. And from there, you could say 140 to 150. So we have resistance and then resistance. We have resistance and then resistance, and all resistance by itself. So that's why I actually don't think that 14,866, it might provide a pause, but I don't think that's what's going to contain it, because this is what you've got going on, moving averages, and they're going to start to change. 4-hour chart, 4 and the 8 are turning higher. The 20 is hooking. Not going to take much, but here's the kick. It's not, it's going to be bullish for the day, but it's not changing my premise for looking for continued downside. I'm just following Elliott. Wave 1, a wave 2. Wave 2s can be deceiving, can be deceptive, and can be very blatantly strong. So they can go and it can get up here and then just as quickly turn. We're being very news driven. There's still a lot of unsolved or unresolved issues that the market needs to put in and digest. And eventually, the longer term analysis will take over. And I think indeed, it could be a 1-2 and a 1-2. And the next step is a 3 of 3 type move. I've discussed this before. It is the point of recognition lies within it, is where we can begin to see stronger and much longer acceleration, and in this case, to the downside. Now, I'm not looking for that tomorrow, unless I'm seeing a move up into here, and then I'm going to get that type of a turn. But right now, I am looking for upside, but the resolution of the move will be for the return of downside moves, and at that point, I'll start to look for acceleration. I'll start to look for these bigger moves to the downside. Those are the ones that are extremely tradable. But right now, those stronger moves are likely going to happen to the upside. Unless we drop back below and hold below that 20, that could change that picture. Then maybe this is all we're going to get. I don't think so. So I'm not thinking maybe we get a pause here, but this is where I actually believe that on a 4-hour basis or even down on an hourly chart, that's where we're going to end up. And the market will likely be higher tomorrow. So we may, if they do this all in Globex and turn it, well, we'll know. We'll know. If it meets requirements in terms of it gets up into this zone or up into this zone and then turns, I'm going to be able to put a 2 on that and then be looking for this third wave. So, or whether it holds here, maybe goes a little higher, and then we come in and then it goes up into these levels, that's also fine, and then turns. Same scenario, just depends on when it's going to happen. But I'd be looking for it to kick in. And again, it's going to be a third wave down. In fact, it's a 3 of 3. This is 1 of 3. This will be putting in 2 of 3 wherever it ends. And the next move is a 3 of 3 move down. We get lots of acceleration. We got lots of downside moves, But those upside moves in between, because it's going to break into its own 5 waves down, those will be just as vicious. So there'll be plenty of volatility. And so again, I need to stress, we need to trade smart, trade according to what the price actions tell you, what your moving averages are telling you, and then add on another layer what your Fibonacci retracements are telling you right in here, and then add another layer, which is what does the Elliott wave count suggest? When you put that all together and it comes out and continues to spell downside, well, puts a little bit more confirmation to have faith and trust in your analysis. And yours may be different. So, and if you're happy with it, that's great. And I'd love to hear if you could, somebody else, if you're doing Elliott wave, I love it. Talk to me, leave a comment. As you know, if you read along, I do answer and reply to all the comments. So again, I'm going to end it here. For tomorrow, I am going to continue to look for continued upside. Again, resistance points, top side, 14,970, 65, 70, up to 81. And we could break just above that 200 and then drop back down below it. Again, we have additional resistance at 15,070 and 15,145. Are those levels? Yes, they're possible. And as we all know, the NASDAQ can tend to overdo things. So I would not be totally surprised. So again, price action, bars, moving averages, resistance, all going to guide the trades for tomorrow. We're going to break it down and put it on at least a 30-minute, and you take another look to see where it stands. Then you're going to take it down to the 15. Like in the 30-minute, it's getting ready to break above the 200. That's going to give enough push possibly to get it to the 1 hour 200, et cetera, et cetera. So you can continue to break this down, and you will see your own picture develop and what needs to happen to keep it in that respect. Right here, 15-minute, this is going up. Guess what? These are lining up. If it starts to come back down, that's your key. And you're going to be able to take it backwards then. If it starts on the 5, then you check in the 15, then you check in the 30, and you check in the hourly to see how strong is that down move going to be. Right now, we're trying to determine how strong is that up move going to be. And right now, 50 is getting ready to cross on the 15-minute chart. 50 is getting ready to cross the 200. And then the 20 is already angling and pointing higher. So we still got some pretty good stuff to tell us we are likely going to move higher, at least for some part of this Globex session. And this is where I'm going to leave it. Again, this is the type of thing that in the trade room, I try to present, I try to work out, and then we attempt to trade it. When we're trading on a 1, 2, and a 5-minute basis. And then again, your picture changes and how you trade it changes. So it does present its challenges. But we're trading and I'm giving this analysis all day, not all day, but from between 6 a.m. to 9 a.m. Pacific daylight time, still is right now. And check it out. You can get all the information on my website. If you need the website address, just send me in a little note and I will let you know. And anyway, leaving it there, next update will be on Monday, October 4th.